Hey everybody, it's Brian over at Showcase Agency. Today we're talking about reverse mortgages, and what we're going to get into is a deep dive into what's the difference between a reverse mortgage quote and a quote that you would get on a traditional mortgage. So those are great questions, and the number one difference is that the terminology that's used is different. So you have an appraised value, but you also have what's called a maximum claim amount, and so that's kind of like your appraised value. And there are limits per county. So each county is going to have potentially have a different limit on what can be used as your maximum claim amount. Now, maximum claim amount, that sounds like that's the money that you're going to receive, but that's not the money you're going to receive. Maximum claim amount is just what they're using as your appraised value, which is your appraised value, or the loan limit in that county, whichever is less, okay? So that's one way that it's different, is you've got this maximum claim amount on the quote, and of course on a regular mortgage, you wouldn't have that kind of estimate. Another thing that you're gonna see on a reverse mortgage quote that's different from a traditional mortgage is what's referred to as your principal limit. So your principal limit is kind of like your maximum loan amount at the time that you get the loan. So reverse mortgages, the amount that you're able to withdraw from your equity is based on your age at the time of the reverse mortgage. So your principal limit is different for different people based on their age, and then there's also different principal limits based on how the loan is structured. So with all of that said, the thing to know about principal limit is that's the amount of money that you're able to get access to. So that's principal limit. Another thing on here that's different about a reverse mortgage quote instead of a traditional mortgage quote is you've got a section on here for your initial disbursement limits. So you've got typically two different kinds of reverse mortgage programs. You've got a fixed rate and you've got a variable rate. When you do the variable rate, you have a line of credit that's left over after you take your initial draw. So this quote lets you know the maximum amount that you can draw at the time of closing, and then at the bottom it'll have what's called a net principal limit, and that basically shows you what's left over, what's on your credit line, your unused portion of the credit line that actually earns interest for you. So that's another thing that's different. And those are really kind of your main differences. Some of the similarities to a traditional mortgage is that it's going to show you your costs that are involved. It's going to show you your interest rate. Another really important piece is this amortization schedule. I'm going to do another video that gets into depth on this one, so watch it. And if you do a discovery call with us, we answer all of your questions. We get you a lot of great new information on reverse mortgages, and we prepare a loan quote and an amortization schedule for you. There's no cost, there's no obligation, and you can sign up for it at showcasereversecall.com. Now, if you don't have a copy of our reverse mortgage guide, you can download it. It's called Reverse Mortgage Pros and Cons. There's no charge. You can download it for free at showcasereverse.com. And then one last thing for you, if you're looking for more video content like this, we're shooting a lot of new videos and posting them on YouTube. You can check it out at reversemortgageyoutube.com.